Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. Hopefully, you guys are not still too stuffed from the stuffing and turkey from last week with it being Thanksgiving, but we are excited this morning, kind of kicking off a series of a couple days of videos here, some events that I believe that you need to look to attend in 2019. Events that I think will help dramatically revolutionize your business in several forms or facets, whether it's new investors or new product, or new exit strategies for your deals that you're buying or coming across from banks and asset managers. And we are excited to kick that off this episode off with a good friend of mine. I was very honored to be a guest on his podcast a while back. And I'm excited to have, I think I'm the first podcast he's going to be on announcing his new event. And so we're excited about this event. This is an event you definitely want to put on your calendar. But before we dive into that, let's give a warm welcome to our good buddy, Dan Handford from Multifamily Investor Nation. So good morning, Dan. How's it going, bud?
Doing great, Scott. Thank you so much for having me. Looking forward to sharing.
Yeah, man. So for those that don't know, tell them a little about yourself out there and why they need to be listening to Dan.
Sure. Well, I mean, it's kind of goes back, even, before I even got into real estate. So I'm one of the main reasons why I got into real estate is because I started having to write large checks to the government, and I was tired of doing that. So I started figuring out what was the best option for me to start to invest to be able to offset some of the income that I was generating. And so one of the things that I started to research really heavily for several years is multifamily investing. And when we say multifamily, we're talking about, you can definitely in multifamily talk about duplexes and tries and, those kind of things, four units, 6 units. But I primarily myself invest in large commercial apartment complexes, like 100 plus units or more. But there's a lot of people in our group, the Multifamily Investor Nation, that are, smaller, that have to buy smaller properties, down to the 5 plus units, somewhere around in there. So that's one of the reasons why I created Multifamily Investor Nation, is to create a platform that provides high quality content and information to be able to allow everybody to understand really what are the major advantages of multifamily investing. And of course, especially the tax advantages of it, because the tax advantages of it for me are what really sold it for me. And I know for a lot of people, that's what it is as well.
That makes a lot of sense, definitely out there. So let's talk about the market right now. We see what us calling banks and talking to asset managers. We don't see a lot of distressed multifamily stuff. That's one of the big questions people get. Oh, hey, you got a distressed apartment complex I can buy the note on? I was like, well, first off, if I did, I'm going to take it down. But second, where are you guys finding your deals? I don't want you to give away any secret sauce, but
sure.
Can you get nuggets to our extended hashtag note family out there that's looking at multifamily? They've been on the residential side. They're looking to, up their game a little bit. Where can they be finding the deals out there that everybody else is missing?
Sure. So I'll describe 2 different ways, because I get to ask that question a lot, and I don't mind sharing. So I'm an open book, so I don't mind sharing my good stuff. But when you're talking about investing in smaller properties, less than 100 units, most of the time those are going to be done through some form of local real estate broker or agent. There might be a larger firm that does some of the 60, 70, 80 units, but for the most part, if you're in the 30 to 50, somewhere around in there, there's going to be some sort of local agent that will be representing the seller there. And my recommendation is to get a buying agent to be able to help you find these properties and to represent you. Now, that's one way to do it in the smaller places, but there's also other ways. Like if you're trying to find a property that's not on the market right now, smaller mom and pop property, one of the best things you can do is start to, find their contact information. And there's web scrapers out there. I even have some contact information if you'd like for any of your listeners to, get that contact information for a web scraper that I found on Upwork that can scrape a county's website, as well as, cross-reference that with apartments.com and get the other information as criteria from that property. But then you can mail them the information. You can show up at the complex. You can drive by. A lot of times there are corporations, when they get a little bit larger, which is harder to kind of pierce that veil to know who exactly to contact. A lot of times you'll go through an attorney's office. I even found a property that was a little over 200 units in Charlotte, North Carolina, that I decided I wanted to find this contact information. So I followed the address down to a big building downtown Charlotte and ended up behind a security desk. Somebody sitting there not letting me go up to see the attorney because they were upstairs on like the 30th floor or something like that, and they wouldn't let me up. So I believe that's really what it takes to really get these properties is to do that, is to actually take that extra legwork. And then the second piece of it is if you're trying to buy properties like I am, where you're getting in those large apartments, really the best place to do that is through a broker. And yes, you can say I want off-market listings, but it's very rare for us to be able to find an owner that is going to be a reasonable selling owner that's truly off market, that's not broker represented. Now, if you start to court these brokers and start to become friends with them, and they start to send you their regular listings that are what we would call on market, not necessarily on LoopNet or MLS or anything like that, because once you get into those large spaces, they don't list them on the MLS. It's only done through these multifamily brokers, through Marcus and Millichap, and we use one through Capstone Apartments in Charlotte there. And so there's multiple types of multifamily brokers out there. And once you start to close deals, or they see you're closing deals with other brokers, that's when those brokers will start to send you some of their pocket listings, those listings that they're not going to send out to their 3,000 email database of multifamily investors. They might say, hey, this seller wants to sell and sell quick. They don't want to go through, LOI and best and final and all that kind of stuff. So here's their information. Let's see if we can get a deal done. They might send it to 4 or 5 of their best people. And that's really what you want, is you want to be able to court those brokers and be able to take good care of them, and also so that they could take good care of you. And that's really the gist of trying to find these deals. It's not easy, it's hard work, but if it was easy, then everybody would be doing it.
Amen to that. Totally agree. If it was easy, everybody would be doing it. Amen to that. So let's talk about your goal is to come in, buy these assets, buy these apartments, and then regentrify them, get the cash flow working again, take over kind of a problem property from from an owner, which kind of and then keep it for cash flow, and then after fund it with cash, and then after a couple of years, get refinance your investors out, or do what?
Sure. So what we actually do, and there's, again, I'll kind of go back to 2 different spaces. So obviously I've told you I'm in the 100 plus unit, but for our, multifamily investors who are part of our group, who are, doing in the, 20 to 50 unit space, most of them are acquiring these properties that have some form of, deferred maintenance, some value add component to it, where there's, the exterior needs some renovation. Some of the interior units might be classic 1960s or 70 units or even 80s units or whatever. And they just need to have a facelift done on them to be able to push the rents up. I'll give you an example of a property we're acquiring right now. We're only acquiring this one because it actually has such value add component to it with very little renovations. But we have a property right now in Knoxville, Tennessee that is 33 units, and we're buying it because we're normally 100 plus units, but this one came across our desk. We couldn't pass it up because this is a mom and pop original owner. They're the original owner developer of this property. Wow. And on this property, there are probably, I think, 20 of the units are month-to-month leases. And what that typically tells you is that the mom and pop owner is scared to increase the rents because they're afraid to, have a high vacancy rate, if you will. But if you have a property like that, then that's a very easy property to be able to go into, obviously doing market research and analysis and talking to other property management companies to make sure you can push the rents up. But we can increase the rents by pretty much doing nothing, just being able to go in there day one and increase the rents to market rents, because the rents are like 5 to 7 years old. And so to be able to go in there and increase the rent, that's an immediate value add without having to do very much heavy lifting. Now, of course, we're going to add a few little extra things inside of the units, maybe spend like $500 to $1,000 per unit, somewhere around in there, maybe even a little bit more than that, but maybe like $1,500, I think, is on that property. But depends on the unit, on what we're going to do with it. But being able to increase it just a little bit, be able to push the rents a little bit higher. And even in that area, we have some of the property. Our property manager has other locations just down the street that are in poorer conditions that are getting like $300 or $400 more a month per month. And so to be able to go in there and just create that kind of a value add, it's great. Now, on the larger apartment complexes that we're purchasing, we have one right now in Greenville, South Carolina. It's 130 units that we're purchasing, closing on it in December. And that one is going to be a complete reposition. So the reposition is going to go from a C-class property to a B-class property. And what we're going to do is put a very large CapEx into it. So this is going to be a little bit of a heavier lift. So these are classic 1970s units. A few of them have been renovated, but not really to the standards of what most of the Class B products are looking at right now in Greenville. And so we're going to put about probably $13,000 a door, somewhere around in there, to renovate the exterior. So that includes the exterior as well as the interior per door costs. and be able to increase the rents from on that property as well. And even on some of the projections, we don't project to try to be like the best or the top, the highest price on our projections. Now we'll still try to get that when we start to produce the rent, and we try to talk about selling it to a tenant or whatever. But we're going to project a little bit lower, using the second or third tiered position from the market leader in that area. So there's obviously renovations, but other things that we look for are areas that we can increase the NOI, that net operating income on a property, because the value of these properties is directly tied to that net operating income. And so if we can increase the net operating income on a property, we can increase the value. And then, yes, in a couple of years, we can refi out, or we can just go ahead and sell it and be able to get our returns that we're looking for, and then go into the next 1031 exchange into the next property, the next larger property. But the other areas that we look for are adding things like valet trash. People that, you have a property that has trash all over the place, or there's dumpsters all over. There's companies out there that you can hire, or you can do it in-house, where you can basically 3 times a week, somebody goes by and picks up the trash in the morning. That is, the tenants set it outside their front door and you can charge an extra $25 to $50 a month for that service. And then you have other services like, obviously it depends on the class of product that you're doing, but you could also add things like, I'm trying to give a couple like a coin laundry service. You can do coin laundry. Some places like this product in Greenville, our goal is to take the coin laundry out of the product, to be able to take coin laundry out and be able to add it into the interior of the units, because it is a B-class property. And we'll maybe add on a car washing station, or we'll add in obviously they have a fitness center. We're going to renovate the fitness center, make it look a little bit better. And one other unique thing about this property in Greenville is that it actually has a large property management office, a large leasing office, like 4,000 square feet. And so One of the things that we're going to do on that property is that we're going to use probably about 1,000 square feet of it for the leasing office, maybe closer to like 1,500 to 2,000. But the rest of it used to be an old house. And so it has like 4 bedrooms in it that have bathrooms. And so we're going to renovate that leasing office and add 4 additional units onto the property. So to be able to look outside of the box and go into a property, that's really what I like to be able to do, and then be able to get it implemented and start to take those returns. And again, the tax advantages is something we haven't talked about yet, but that's definitely something this property is going to do for us.
Let's mention that. What are some of the tax advantages that you guys are getting?
Sure. So, obviously, when you buy a real estate project or property or whatever, you're going to be able to depreciate it, right? Well, most of your single family properties, not most, all of your single family properties are going to be depreciated over a 27.5-year period of time. Commercial is closer to like 39 years, something like that. So in multifamily, though, even if even these larger 100, 200 unit properties we're buying, they're depreciated at 27.5 years, not 39, because they are considered residential. Now, I don't want just my 27.5-year depreciation. I want to do what's called cost segregation on these larger properties. And the larger the property, the easier it is, the more cost effective it is to be able to do that. And what cost segregation is you are hiring an outside engineer firm to come in to be able to piecemeal the property down to the sheetrock and the studs and the countertops and the doorknobs and the floors and the shingles and everything. And we're able to accelerate the depreciation on that property 5 to 15 years, depending on the item inside the asset. And so now we're able to accelerate that depreciation faster than 27.5 years, which you can't do unless you do cost seg. And that cost seg analysis does cost a lot of money, which is why you can really only afford to do it if you're buying these larger assets. And all of our passive investors are able to actually, we pass through all of those depreciations through to our passive investors. And then, of course, last year, Trump enacted his new tax law where he added what is called bonus depreciation. So we can actually, expense 100% some of our capex that we're doing that first year and pass through again those same depreciation losses through to the investors. And so again, there are so many advantages to this. And so think about it this way. I'm cash flowing off of a property because we only buy cash flowing properties. So every month I'm getting a check from my cash flow. At the end of the year, I get a Schedule K1 that shows I actually lost money due to these passive income, due to the depreciation. And then that loss can also offset other losses. I mean, other gains. And so obviously I'm not a tax advisor, I'm not a tax attorney, so I can't tell you exactly all the different nuances of it, nor would I want to, because you need to be able to talk to your accountant about that, or I would say a tax attorney or tax advisor about this, but it can definitely be a game changer for you to be able to reduce your taxable liability.
Yeah, those are some great, great nuggets there. So one of the big things I like to ask you is where do you see some of the biggest mistakes of investors that are getting in the multifamily game? What mistakes do you see new multifamily investors making?
Sure. Well, I mean, everybody would probably say overpaying, right? Well, I think a lot of people would say that, they looked forward looked back 5 years of the properties that they didn't get. Even if they would have overpaid, they probably would have done really, really well right now. So obviously you had to look at the current state of the market and kind of see where we are. One of the reasons why I like this kind of an asset is because even back in 2008, it was one of the very few property asset classes that did okay during the crash, because when people couldn't buy homes, where'd they go? They went and rented an apartment. And so they were able to stay pretty stable. Very few actually defaulted. There were some, and most of them were ones that had a note that came due in the middle of it, and they just couldn't refinance out of it, so they were forced to sell. And so obviously when we take that into consideration even right now, because obviously they're calling for some sort of correction, which if you go back and do the research, they've been calling for this correction since 2015. That's when they first started talking about it. So who knows when it's actually going to happen? But obviously with the volatility of the interest rates rising and various things happening, obviously the market is definitely shifting and moving. But I think the biggest thing is making sure that you're not over leveraging yourself. That's one of the biggest mistakes that happened back in 2008 is properties that were over leveraged. I mean, they were giving away, Fannie Mae and Freddie Mac were doing 90-95% LTVs back then. Now they're not. I mean, they're already tightening up now where we're seeing 66-68%. So they're really tightening up on proceeds and increasing obviously the interest, because the market's rising, because the interest rates are rising too. But I think the biggest mistake is look, somebody who really wants a deal and then fudging the underwriting that to make it look like a really good deal. Or the other thing that I also see is people buying in a market because the entire market is a hot market, if you will. For example, if you look at something like, Charlotte, North Carolina, there are some great assets in Charlotte, North Carolina, and there's some great markets in Charlotte, North Carolina. But guess what? Charlotte, North Carolina also has some really bad locations, really bad markets that you do not want to invest in. And so unless you really know that market, I would suggest being able to be very careful on who your sponsor is and who you're actually investing in, because you definitely want to make sure that if somebody is saying that a property is in Atlanta or in Jacksonville, Florida, or in Orlando or Charlotte or wherever, and they're not actually talking to you very specifically and very granular about that submarket, there's probably a reason for that. So you have to make sure you keep an eye out for that as well.
So that brings a good question there with raising capital. If people are just investing kind of blind, they should not be investing blindly into a fund or a deal. You're saying they should really do the research on the principles. Is that correct? Is what you're saying, Dan?
Yeah, I mean, I think the biggest thing too is trusting the sponsor, and trusting that the sponsor is the person who's putting the deal together and presenting it to investors. Because if you trust your sponsor, then I think that you wouldn't have to do as much of that. And the reason why is because most people who are investing passively, they don't have time to do all this research. They don't have time to go and visit the property and do property tours and work with property management and take down the properties and work with brokers and raise cash. They don't have all that time. So they have this fear of missing out, this FOMO, if you will, of not being able to gain be able to get the passive income from real estate, because they don't have time for it. And so they're blindly, a lot of them, putting money into deals, which, again, it's all about understanding and vetting the sponsor first. And as long as you can understand and vet that sponsor and they have a fairly good track record, or at least they have somebody who is on their team that has a track record, that's one of the things you want to make sure you look for is a sponsor that really knows what they're doing and really knows how to handle these types of properties. Because you never know. I mean, there's properties that start to go south and they've never run a business before. And that's what this is. This is running a business. Yes, you're buying an asset, but it's running a business too. When the NOI starts to drop, you got to know how to pivot. And if you don't know how to pivot, then you're going to be stuck.
Good points there. That's a huge, huge point. I think a lot of people have to realize out there. It is running a business. You got to make sure people that are running that are doing a great job or know how to adjust when the market changes. Now, you are out of Columbia, South Carolina, correct?
That's correct. Columbia, South Carolina.
There you go. Go Gamecocks or go Tigers?
Yeah. I actually do go for the Tigers when they're not playing the Gamecocks, but my alma mater is the Gamecocks, so I have to play them, or I have to go for them. And I will say that this past weekend, we did a very good job with a second-ranked team for not being ranked. I mean, their defense was terrible.
Exactly. That brings me to a point. You mentioned a couple cities where you find most of your deals, like Big Ten country, Southeast Conference, part of the United States.
Yeah,
the
so the Southeast
Midwest?
is where I focus primarily, that in the Texas market. So I have some properties in Dallas and Houston. We also have properties in South Carolina. So they're all over the Southeast we're looking at. So Charlotte, Raleigh, Durham, Jacksonville, Orlando, and Atlanta are our top markets. Obviously because Columbia is in my neck of the woods, I'll look into Columbia as well as Charleston, South Carolina, and I even have offices there too. So something else in my background is I have 5 medical offices that I run and own. They're non-surgical orthopedic clinics, and we do prolotherapy, PRP, stem cell, those kind of things. And I have them all over South Carolina, so I can have a little bit of a heads up, if you will, on that market because we're in it. So we're in Charleston, we're in Greenville, we're in Columbia, Fort Mill, which is South Charlotte market, and then in the North Augusta, South Carolina too.
Cool. So is that where you kind of raising your funds from? Is from the medical side of things, or are you?
I do have a lot of physician friends that are investing in my deals. And that's the thing with them is that they've been following me for a long time, even before I went into real estate. And when I went into real estate, they wanted to follow me more. So they, a lot of my friends, I'll call up and say, hey, would you be interested in this project? And they're like, how much are you putting in, Dan? And I'm like, I'm putting in 250. I'm like, all right, I'll match it, So it just depends on the person. But yes, I think that, again, the physicians are, great investors because they don't have time to go and buy a real estate project, but they do have time to be able to press a button to wire some money to be able to get some of those passive losses and also passive gains.
That's good stuff out there. So one of the things you've done really well is you've built an online community, Multifamily Investor Nation, and excited that you're putting on an event come the first part of the year. You talk about that event and what makes it so unique.
Sure. So I'll have to give credit to you, Scott, because when you came onto my podcast, we were talking first, we were just interviewing you. And I was like, Scott, I really like you. I want to have you on my longer version of my podcast. So I have normally on my podcast, we have, daily interviews because it is a daily podcast. And on Saturday, I have my own weekly show called Step Up Your Game with Dan. And that's the one I wanted to have you on. And it was a selfish reason, I will tell you that. But I took a page full of notes. I have it sitting here on my desk of all the different things we were talking about. And I think that episode's going to be released in about a week or two. So if your listeners want to check that out, make sure you go to toughdecisions.net, look at our podcast there, subscribe to it on iTunes. It's called Tough Decisions for Entrepreneurs. And Scott's episode will be released probably in the next week or two. I'm thinking maybe this Saturday, but I don't know for sure because my editor is the one who does all of that. But during that podcast and during that interview, I would say that you are the one that really just had the light bulb moment go off in my head. And I was like, there is nobody doing these virtual, summits and virtual events for multifamily. They're all live in-person events. And don't get me wrong, I like the live in-person events. I just don't like putting them on, which I know you don't either, which is why we do virtual, right? And so to be able to do these virtual events, one of the biggest things you have to figure out is the networking, which is why I like what you're doing with it, because you figured out that networking component of it, how to network with some of these investors and how to network with some of these people that you would normally only be able to do if you were at a live event. And so that's my goal is to create this. I've already started the event. I've already got the page created. Everything's done. I got you coming. You're going to be speaking at it. So I'm really excited about that. It's called Multifamily Investor Nation Summit. And I'm just really excited about it. We're going to have over 1,000 paid attendees on this very first one that we're going to launch. It's going to be January 17th through the 19th. And just really excited about it. And thank you so much for your encouragement to be able to get it going.
Yeah, man. Glad to help out there. And we've got the link again scrolling across the screen for those that are listening out there. It's a bit.ly link, very easy for you guys to find, bit.ly/SCWCN capital MFINS Summit. So if you check it out, what's the best website for them to go to? It'll probably a little bit easier than on the link.
Well, you can go to apartmentevent.com. You can obviously go to apartmentevent.com, research it. You can also put that link if you want in the comment section or wherever you are. And look forward to, you going and checking it out and kind of seeing what we're doing. Again, it's all for multifamily investing, even for those who don't even know what it's about and they're just getting started or they just want to get information on it. We have some of the best speakers coming. Obviously, we have Scott Carson on the roll there. So we also have other people in the space, Neil Bawa, Joe Fairless. We have Vinny Smiles Choper coming on, Jonathan Twombly. So go to apartmentevent.com and you can see all the different speakers that we have there. We're going to have 30 plus speakers, probably looking like closer to 40 or 50 right now. And we're going to do 6 different panels, and it will all be recorded. And just like at your events, we're going to do the same thing, kind of follow after your footsteps and, provide the attendee list to all the people who have registered. And, just really excited about everybody, being able to join in on this massive, Multifamily Investor Nation Summit event.
Yeah, and you're doing it on a weekend. It's a Friday, Saturday, Sunday, correct?
That's correct.
And
actually, no, this was going to be a Thursday, Friday, Saturday, but still kind of the weekend.
Sorry, yeah, Thursday, Friday, sorry. I'll be speaking from the Bahamas.
And some people that I've reached out to have given me excuses as to why they can't come and speak. And I'm like, if Scott Carson from the Bahamas can tile in for at least an hour to present some content, anybody can,
Right. Yeah, and this is going to be primarily content driven as well. It's not a pitch fest or anything like that.
Correct. Yeah. No, it's definitely content driven. Just like yours, very value driven, and really just trying to provide as much content as possible. Obviously, people are looking for mentors in the space, so a lot of these speakers are mentors and coaches, and so you can look them up after the event and try to reach out to them. But it gives you a really good idea of who is in this space and also what they represent, and to see if you really connect with them, because not all coaches are the same. They might provide the same content, but the way they actually just present that content is totally different. And so you need to make sure that you find one that is good for you. But you will learn so much at this event. And again, you can find more information at apartmentevent.com as far as all the different specifics on the topics and various things like that.
Yeah, I'm looking forward to it. It's going to be a good time, good networking. You're doing some of the same things we do with our note camp we had last weekend. You're providing the replays as well to people out there too for them. So if they have to miss an hour or two, they'll be able to go back and catch the replays, which is phenomenal. Because I think everybody wants to level up, and everybody's a little bit worried about what the market's going to do in the next 12 to 24 months. I'm a big believer we're going to see a downturn again, especially in the housing side.
One of the things I'll mention about that is I had somebody ask me that last week. They said, what do I tell an investor if they ask me, about the stock market crashing last week or going really far down last week? And I'm like, well, that's probably a really good point to bring up, because would you rather have your money in that or would you rather put it in multifamily? Because where are you going to put your money, right? And so I'd rather put it in a cash flowing asset that's going to be, producing that revenue for me on a regular basis. And there is no way, even back in 2008, the market did not crash so far that real estate went that far down. It didn't come back. The people who actually were able to hold through that crash are doing phenomenally well right now.
Yeah, amen to that. We bought a lot of stuff back then, held it through the downturn and the upturn and stuff like that, because we were buying the stuff at a substantial discount and things like that. So there's opportunity out there if you know where you're looking, and you've got as you said before, the connections, and you're reaching out and showing people that you can close and putting a good team around you to find some stuff.
Yep.
So, what's another mistake that besides overpaying? Any other mistakes that you see investors making out there, Dan, whether maybe it's on the raising capital side or the marketing side or the operations side? Is there anything specific that sticks out?
Sure. I would say that, one of the things that a lot of the newer investors will do is especially if we're talking about more of the syndication space where you're buying a little bit larger asset, 50 to 75 units or more, and you're pooling multiple investors into one deal. Obviously you have to register all of those with the SEC, or at least get the documents prepared for the SEC they're called the PPM documents, and get an SEC attorney and stuff like that. But I would say probably the biggest mistake that I see is people not to say people, really the investors or the sponsors that are putting these deals together, not understanding who their customer really is. Because a lot of times they think about the customer being the tenant. The customer is not the tenant. So the customer is your investors. And so when you're trying to find a property, you don't try to find a property that's good for you or that's good for the tenants. You find a property that's good for your investors. And what I mean by that is, obviously you have to take care of your tenants, because the tenants are the ones that are paying the monthly rents, and you want to make sure you don't have very much turnover with that. So that's not what I'm saying. So in the business itself of the apartment complex, yes, the tenant is the customer. But in your business, when you're pulling multiple investors together, you have to make sure that you can sell that to your investors. And so one of the biggest mistakes that I see is as a new sponsor trying to find a property because they get a good deal, if you will, in a market that investors do not want to put their money. And so it's a tertiary or quaternary market. They got a really good deal on it. And I say good deal, but it's harder to not only sell the investors initially, but it's also harder to sell it at the end. So when you're trying to get out of that deal, you're going to have a fewer pool of people that are wanting to buy that. And so a lot of people, when they're in this space, they try to get caught up in the whole cap rate game. And I want to buy it I want to buy it the highest cap rate as I can. Well, to me, I look at the cap rate and I go, the cap rate, again, for those of you who don't know, the cap rate is what allows us to know what the value of the property is. And so when that cap rate goes up, that means the value of the property goes down. If the actual cap rate goes down, then the value of the property goes up because the NOI is the constant, the net operating income. And so with the cap rate, I actually prefer buying at a lower cap rate, because if I spend my time, energy, and effort trying to renovate or value add a property, but it's only an 8 cap, I've only increased the value on that property by $1.25 million if I increase the NOI by $100,000. But if I do that same energy, time, and effort on a property that's a 5 cap, now I'm at $2 million increase in valuation. So you can see the reasons why you would want to buy at a lower cap rate, not always be looking for the lowest cap rate, because I want to make sure that I can get the best return for my investors, but also myself, because I'm an investor first. I got into this game because I wanted to be able to be a passive investor, and I wanted to get into this game because I wanted those passive losses as well. And so I'm trying to find properties that are cash flowing and that are providing these losses and that are on these lower cap rates, because I'm going to get bigger bang for my buck if I'm buying in those lower cap rates.
Well, and you bring up a really good point there, but everybody wants to buy in cap rate. And I see this happen all the time. People go to one workshop, or they watch one webinar. I'm like, oh, I'm looking for a 13 cap. I got to buy a 13 cap. And I'm like, if the NOI makes sense and you've got these other opportunities, depreciation, you're able to do some value adds to it, increase the things on that. There's opportunity. It's not all about just what the cap rate says. That can be,
exactly.
Number can be adjusted, and depending on what the market does and what you put into it, you can add a lot of value to your bottom line, right, Dan?
That's right. That's the whole thing is trying to increase that NOI. So upon exit, you can actually get a nice paycheck at the end, And so if you're buying at a 13 cap, when you sell it, you're probably going to sell it at like a 14 or a 15 cap. So you're not even going to make that much money off the deal. But if you did that same kind of time and energy, because here's the thing. The reason why I'm in the larger space, the 100+ units or more, is because it takes me the same amount of time to close a 150 unit than it does a 50 unit. But I get more upside and more return on a 150 unit than I do on a 50 unit. And so all of it has to do with economies of scale, but also where that asset is. Because before you even buy a property, you should know who you're going to be selling your property to in the end. And if you can't define that person who's going to be buying it at the end, then you shouldn't be buying that asset. You shouldn't be buying it because you're not going to be able to sell it to the person at the end, and you're not going to be able to sell it to your investors. And I see a lot of people doing that, where they'll buy a property or put an LOI on a property and get it under contract and then not be able to raise the money for it because it's not in a very good market.
Mm-hmm. Good points. Good stuff there. If anybody out there has got questions for Dan, now would be the time to ask that there. Guys, if you go to, once again, the website, there's apartmentevent.com to check out the Multifamily Investor Nation Summit coming up January 17th through the 19th. Some of the great things that he's got, if you go to the website, you'll see they're going to be talking about mindset, going to be talking about the market update 2019, raising capital, closing deals, financing strategies, investor relations, finding deals, and then how to select market. And one of the great things out here, you've added a lot of value add to what you're doing, Dan, and really, like you said, and I agree, there's nobody in the apartment space really doing these virtual events at all. And that's an awesome opportunity out there. You're doing a great job out there. I look forward to seeing the event take off like I know it is, because you've already got, about 100 seats sold, I think you said, as we're getting talking?
Yep, we have over 100 attendees now.
That's phenomenal. You still got 50 some odd days to go, man.
Oh, I know. Well, and that's the thing is that we're going to be spending quite a bit of time doing some podcasting, doing some interviews, various things like that, and really doing a lot of social media. I mean, we're already blitzing stuff all over the place now. So, one of the things that one of the strengths of mine is marketing, and so obviously with this first event, I'm going to pretty much be hands on with all of it. And then what normally I do is just be hands on the first event, the first thing that I do, and then I'll find systems and procedures to put them in place to be able to hand them off to somebody else to let them do it.
There you go. Smart thing. And that works well in the multifamily space too.
Yes, it does.
What's the best way for them to reach out to you if they have some questions? Just going to the event, on the contact page, or you have different contact information, Dan, you'd like to give out?
Sure. Yeah. So you can go to multifamilyinvestornation.com, and there's a place there to subscribe to our email list if you wanted to just jump on there without having to register for the event. Obviously, you can go to the apartmentevent.com space. We also have a Facebook page and a Facebook group. You just search for Multifamily Investor Nation. I'm on there all the time. You can also email me at dan@multifamilyinvestornation.com. Be glad to answer any questions that any of you guys might have.
Awesome. Well, hey, man. Wishing you the best of luck. We'll definitely be in contact. Once again, everybody, check out apartmentevent.com. It's the easiest website to go to. You'll see the speaker lineup, the subjects, be able to register there directly. You still got early bird specials going on right now. Is that correct, Dan? We
do. So the tickets are $695 or $697. But right now they're on sale for $197. And so we're increasing the price as closer we get to the event. So if you want to jump on at the lower price, I'll go ahead and suggest getting your seat now at the $197 spot.
Amen to that, brother. Amen to that. So once again, Dan, thank you so much for coming on the Nicholas Show. We look forward to working with you in the future on some different things as well. And look forward to speaking at the Multifamily Investor Nation Summit here in January.
Sounds great, Scott. Thanks for having me.
Anytime, brother. We'll talk to you later.
All right, you too. Bye.
All right, guys, that's going to wrap it up for this episode. Like I said, check out the website there. Dan's offering a huge discount right now. Some great speakers on the schedule, and he's got some great stuff that he'll be giving away as some ways to boost your database, connect with a lot of other investors. He's actually planning on giving away the database as well, too, like we do with our event. So great opportunities for you to really expand your database and find some investors. So on that, guys, go out, make something happen, and we look forward to seeing you all top, everybody. Bye.